Shift to another reform announced by the Reserve Bank, if you please, yesterday. Well, it's not quite a reform announced. It is something which seeped through actually from Delhi, that the Reserve Bank has asked the government to allow Docomo to buy its shares in NTT Docomo at a price which is much higher than the fair market price. It was a pre-agreed price of 58 rupees per share, whereas the fair market price, according to Tata Tele itself, is 23 rupees. Tatas were willing to pay up that money, but the rules didn't permit it. It appears that the Reserve Bank has requested the Finance Ministry to allow this as not just a one-off case, but make it a rule hereafter that foreign investors are able to protect their capital, protect their investments by agreeing to a preordained price for buyback. What difference will it make to foreign investors in India? Romal Shetty, Executive Director and National Head of KPMG, joins us. Romal, how big is this? Is it going to, debottleneck and allow a lot of foreign investments, you think?
So, I think the foreign investments are based on two things. One is obviously the competitive market, and second is something like this. I think this is a very positive, welcome move because a number of foreign operators have come in and to some extent have burnt their hands. By doing this allows an option to exit, and I think in any market, whenever foreign investors come in, they look at both entry as well as exit to be reasonably easy, right? And here in this case also, it's not about that Docomo is making any profits, it's just cutting its losses, and it had an agreed price. So I think from an India market perspective, this is a positive signal, because over the last few years you really haven't seen any new foreign investor coming in. We've had talks about AT&T, Deutsche Telekom all coming in, but nobody has really come in. I think this just helps in that whole process for them to make a decision to come into India, and most of them, remember, will not come as brownfield, they will greenfield, they will come in with a tie-up because it's not possible to set up a network and run it from scratch now. So in that sense, I think it's a positive move.
What about the counter argument? The reason why these rules were put up in the first place, that Indian parties typically are the weaker parties when you argue or when you are negotiating with big foreign investors, and a rule like this enabled the Indian partner to say, sorry, you may want to come at these conditions, but my rules don't allow it, and thereby extract a better term from the foreign investor. Doesn't that argument hold anymore?
See, I think there are also certain conditions, right? I think there is a lock-in period for a particular number of years, so it's not something which is going to be immediately. Second is, in the telecom side of it, I would hesitate to say actually any of the Indian players are very small.
Okay.
You need to have large sums of capital. So I would say these are big players. These are not small players at all.
Okay. So can you just elaborate a little more on which are the sectors that would benefit from this? I mean, you spoke about the overall foreign inflows increasing, but sector-wise or company-wise, any more details?
Okay, maybe I'm a telecom guy, so I may not be able to answer. But I think overall, in an overall perspective, I'm just saying from an economy perspective and from foreign investors. See, these are reputed foreign investors who come in, and sometimes your investments will not hold good, not necessarily because of various reasons. Like I said, in the telco market, there's hyper competition, right? It's not like 4 or 5 operators. There are 8 or 9. So some of them will suffer losses, even though they come with big brand names. They've got good products in whichever markets they serve. But this at least gives them a reasonable sense that, okay, even if I have to cut my losses, I know where I can exit. So I think in that sense, anything which brings clarity to investors, foreign operators in this kind of a market is always helpful. And I would assume that would be similar for other sectors as well. There's no doubt about that. If this gets passed, I know there's still an approval stage.
Okay, Romal, I was under the impression you were a lawyer and therefore you would give us some spin on this from a legal angle, but let me nevertheless put the question to you. There are instances where a buyback is arranged from the existing Indian promoter at a pre-arranged price. For instance, in insurance, a lot of the guys who came in actually came in wanting 49%. The law at that time allowed only 26%. The local partner was a Dabur, a Bajaj, an Exide, who were not interested in insurance at all. But they agreed, some of them agreed that they would sell off the shares when the 49% rule came in at a pre-agreed price. Now that price is lower. Technically, if the insurance companies had to pay a market price, they will have to pay more now. Do you think it will work the other way as well? And this time the foreign investor will be able to buy back at a lower price?
So it's possible. What you're saying is possible. But I think as long as you have reasonable safeguards, I think there will be some safeguards or some conditions pursuant to which a different price, a preordained price will be actually agreed. So I think there would be both ways. But I think to some extent, if you keep thinking, and that's where the economy opens up. I mean, you can't keep thinking of all the scenarios because that's only going to put in more and more restrictions. I think there's got to be some safeguards in place, and then allow the companies to do whatever. And even I think the Indian promoters also not necessarily just going to agree to a higher price just because of some specific reason. I think that they look at the business return, and therefore they would make an informed decision. So it can go both ways, I agree, but I think it's time to open it up.
Okay, are there any telecom guys who you think will come now? Just
purely based on this decision, no, I don't think so. I think they will be looking at saying that, okay, for example, if the M&A norms on the restrictive norms on M&A, for example, may be opened up, the spectrum roadmap and what the auction price goes to, because most foreign investors, I can say, do think the valuation is very, very high even now, though they believe that the market will get better as it goes by in the next 2-3 years, but they still think it's expensive. So I think 2 or 3 different things, and then I think the foreign investors will come in. People are looking at the market. There's no doubt. I think there are 4 or 5 telcos globally who are looking at entering into the India market.
Okay.
But it's just a question of the valuation being expensive.
All right. Thanks a lot for that, Romal. So perhaps a little more money from the telecom space because the rules are a little easier. But how do you interpret these rules for other sectors? Vivek Katpalia of Nishith Desai Associates is also joining us. Vivek, what are the ramifications of RBI loosening up on this put call options and the price at which investors can buy back their shares? I particularly want to know in insurance. A lot of people agree to come in at a pre-agreed price. Now will the Reserve Bank insist on fair market price, or can they come in at a lower price?
Well, as far as the development that has taken place with respect to Tata Docomo, I think that's a very welcome move. I believe that the Reserve Bank of India has obviously written to the Finance Ministry and has asked for their approval, from what I understand from the news reports. Like your previous speaker said, there is no assured price that is currently permitted for put options, and the price here is 58 rupees, whereas the fair market value, which is what has to be followed with put options, is 23 rupees. If the RBI does move in that direction, in my view, it's a significant change from a control on foreign exchange outflows to a more confident approach that the RBI is now willing to follow. And importantly, I think this would then have to also be considered for all other investments that have optionalities built into them for the foreign investors, because this, if allowed, would firstly set a precedent. As we know, there are a number of disputes currently, a lot of them between private equity investors who have these terms in their investment agreements, and even this particular case is as a result of arbitration. So it sets a precedent. I think the RBI would then have to consider, and the government would have to consider, whether they should just amend the regulations in a way that it could be on the automatic route, or whether they should have an approval-based system on a case-to-case basis. But going forward, if this is permitted, others will come across and will also seek the RBI's approval to be able to exit at their assured prices. Coming to your question on the insurance sector, I think that's a slightly different issue, because if you are coming in as a foreign investor, you have to follow the pricing guidelines. And if you're going to acquire shares, they have to be at a minimum price as per the RBI guidelines of fair market value. So you can't acquire shares which are below the minimum price set. This is an issue with respect to options. That is an issue with respect to at what price can you exercise, acquiring more shares. So one will have to see how that pans out. But I think this is a very welcome move.
Okay. You expect a lot of foreign capital. Which sectors you think are going to benefit?
I think if you look at the FDI inflows into India, most of the FDI comes into the services sector. a lot of private, and I think we also need to make a distinction between strategic investors and private equity investors.
Yeah.
A lot of the optionality clauses have been used by the private equity investors, and a lot of those investments have gone in technology and various other service sectors. Also in sectors where downside protection is critical, for example in sectors such as real estate and others where you have seen hybrid instruments come across. Of course there are certain lock-in restrictions which would continue in my view, because I don't think the government would want to encourage short selling, so that 1 year lock-in in my view would continue if there is a relaxation. And in defense and for example real estate there is a 3 year lock-in. So I don't think the lock-ins will go, but I think overall FDI inflows would be more confident of getting exits in the event they want to get out.
Okay, you can't think of, does it become a quantum leap in terms of, say, doubling of FDI? I mean, you handle a lot of such clients. So are there too many people who are wanting options and are not getting it?
Yes, well, today you can get options. The only issue is that you can get options, but you can't fix the price at which you're going to exit. Yeah. So we have moved from a situation of no options to options following particular pricing methodologies to an options in July 2014, which said that now you can choose the pricing mechanism as per international standards. But there will be, in my view, a significant jump, because now you will be able to get some sort of assured return and put that value into your contracts if this in fact is blessed by the government.
A lot of money was wanting to come into FDI in land, was wanting to come on these conditions, right?
Yes. Real estate is one sector where downside protection is very important, so that's a sector. But then in real estate there are other instruments as well.
Okay.
Which can be used. So it would be a sector which would benefit, but you could use non-convertible debentures and other instruments as well.
All right. We'll leave it at that, Vivek. Thank you very much for joining us and putting that into perspective. So it's not as if it's going to be a free reign. Lock-ins will continue, and any pre-agreed price cannot be below the market price. So I don't think Bajaj Finserv, according to Vivek, is going to be impacted. But options, you will have more freedom in pricing. So maybe real estate, telecom will see more FDI investments.